Welcome, everyone. It is Fed Day, and we are all live here during the market hours. It's been an interesting day. We tried to trade up to unchanged early in the session, and then they backed off. The sellers showed up, especially in the Dow Jones. They definitely hit that really hard there. So, yeah, interesting day. Welcome. Hit that subscribe and like button. Share these videos. Share this live stream with folks. We're going to be here for 3 hours, so it's going to be quite the long run here, folks. So feel free to ask some questions. Just got something I need to do over here and check our live room and just see what's going on. So we'll get warmed up here as we get going. Actually, quite a few people over in the live room. I'm sure they're watching on here. Yeah, just let me take care of clean up a couple things here, folks. Yeah. Okay, folks. Yeah, I just needed to. We've got what I'm doing here. We normally have our live trading room going right now, so I'm doing this for the overall community, everybody. So I'm going to be looking at their questions when we get into some Q&A. They get top billing. They pay to be here, so and you're welcome to join. You can always find out about us by going to kendallreport.net. There's a whole bunch of stuff there. I have several access points, so that's usually the best. And you can also go there by finding out about the indicators. Go to www.kendallreport.com/indicators, and you can find out there's a free offer for the live room there. So anyway, yeah, so just kind of getting into the groove here, folks. Interesting. Interest rates down. And the big dialogue, it fascinates me only because of what I've been telling you folks here on the channel is there's some expectation that the Fed's going to lower rates toward the end of the year. I'm here to tell you, just like if you go back when they said it was transitory, said, no, it's not. I'm telling you, they're not going to lower rates. And this inflation number is going to hover much higher than people think. I've been telling you probably around 4%, 3 to 4% is going to be probably the low for a while, like multiple years. I don't see us getting below that. And it is kind of interesting with the new Congress in play now, and the House is starting to bring up some interesting things. I really think that all of the COVID stimulus, all that stuff, man, there's just so much fraud around that. And everybody, we all knew that was going to be the case. There was going to be scams around that everywhere, right? So now they're trying to figure out maybe how to claw back $10 billion or some ridiculous number. That's not going to happen. It's just interesting watching what's going on here. So, yeah, Larry, I see a question there before we get going. I'll answer your question here in just a minute. Yeah. So yeah, just an interesting world, folks. So, today, I don't think this is going to end up to be as negative as it is, but we're down 328 on the Dow Jones is getting hit, down a little bit over 1%. S&P is down 22 handles on the cash, and on the futures. On the cash, we're down 21 and 90. So we're just seeing a lot of stuff. Typically, what I do in the live room, and I'll continue to kind of follow that, is kind of go through and look what the markets are set up before we start thinking about trading. And it doesn't matter if you're there on the opening tick or if you come in whenever you show up. You just need to get a feel for what's going on in the markets. And for the most part, like I said, we got interest rates down, the futures are down, gold's kind of flat. There's really nothing drastic because it's kind of a wait and see. But the selling that we're getting ahead of the Fed is interesting because typically it's kind of a wait and see type of situation. And what we're seeing today is let's sell ahead of time. So I got a feel there's a whipsaw coming in here somewhere. And so we'll see how all this unfolds as we go through it. So Larry, here's the answer. Explain why I must bounce between TradingView and TradeStation. I want to purchase indicators, not for TradeStation, but TradingView. Thanks for explaining. Yeah, so here's why. You have to understand, TradeStation is like part of my DNA. I was the very first person to write code outside third-party offering of any kind of software to go into TradeStation. There are actually some user studies and things in there that are embedded going back into the 90s that we wrote. My old company was Intelligent Market Analytics, and we had a product called Market Mind, and that's where all the models and everything come. That goes back to 1992. So it's just part of me. There's some things that TradeStation's a really more of a pro platform versus TradingView is a little more retail. There's some issues or differences with the data feeds. We've been trying to nail some things down because I think they have multiple servers that are syncing up, and we've got literally have clients all over the world, and we've seen some kind of inconsistencies on the product. You can take TradingView though, and link it right in with your TradeStation, and you can trade direct from TradingView. So that's something you can do. So I'm not sure that's a great explanation, but that's the reason why I bounce around. It's really more verifying to make sure everything's right. I've seen, like I said, some inconsistencies on that stuff. So yeah, so I just look and see what anybody's saying out there. Yeah, so let's maybe we can do a couple preliminary stuff. Let's go over and maybe take a look at a couple things here. I'll come over here and let's go over to a different view of things, and let's take a look at, didn't mention crude oil. Crude is down 243 right now, so it's actually went down. I normally don't show the models here on this, but I'll show you. We got an exit yesterday on we had a long position on this. Let me go full screen so you can see this. We had a long position on crude. It exited. It actually took, it looks like it bought at 80, sold out yesterday 77. We're continuing to see it start to come down. The PPMs are kind of come down. If we come over here and go over to TradingView and look at what the algos are saying, this will be interesting. This is daily. Algos are looking like one more day down. There's a fib target right now at the 73.60 level. So that should be more or less down toward the target range. Everything looks like it wants to turn around probably after today. And I suspect that what we're going to see here as we come through this Fed day, that whatever we see today, it won't look like this tomorrow. Whatever we get from the next couple hours as we get into this high volatility. And so the overall patterns that we're going to see volatility. I'll go through a lot of those things. I'm just looking at a couple of your comments here. Let me put this over. I can get this actually on another screen here, and it'll be easier for me to read these without having to look off. So yeah, pretty much it. If you have questions right now before we get going, yeah, listen. I've been talking to you folks about this, just a longer term. We're probably going to see 4,400 on the S&P. I know everybody's negative, but this was a dilemma I was starting to talk about a few minutes ago. And let's go back to let's go back over to this other page here while we're just kind of getting set up. Yeah, we've got quite a bit of time to kind of fill here. So let's come back over here just so we can get a look at all, have a live feed on a lot of different markets here. I would, one of the things that it's interesting, I was starting to talk about, the markets are looking at somehow, third quarter at the end of the year that they're going to drop rates. And I said that a minute ago. I don't think that's what's going to happen. I think they're going to push the Fed funds into the 5 handle, which is 5% plus. And I think that's going to be pretty significant as we go forward, because the markets have a different expectation, but I don't think that's a negative thing. I think it's actually more positive. And as I said a minute ago, I think the inflation is going to continue to maybe moderate a little bit, but it's going to stay. We're not going to see 2%. We're not going to see the Fed's numbers, but we are going to see probably stabilizing around 4 and maintaining that for a while. So yeah, I'm just trying to look at a couple comments here. Yeah, so I don't know. I don't know anyone that's bullish. I see somebody saying, "Oh, is it bull Wall Street?" Everyone's negative. I don't know. I see a lot of negative stuff. I just had CNBC. Some guy was talking about how this is the last positive employment report we're going to have, and that may be the case. But unfortunately, too many people try to equate that the economy is the market and the market is the economy, and it's not. So whether it's looking forward or whatever, there's just a lot of things going on. You folks know that watch the channel all the time, looking at our database. We're still 77% long on a short-term basis. We're basically 50% long on intermediate, and that means we have literally about 8,800 symbols out of our 16,000 database that are trending. So when I say we're a percent bullish, that doesn't mean it's over a 200-day moving average or some amateur stuff like that. This is actually recognizing a trend, that the trend capabilities. Now, we run about 10 million data points every night when our servers run. So we're looking at each symbol has about 60 rules, and there's about 300 variables, and on one of the models, on almost 600 variables on another. So it goes through all these things, checks it out, puts a little 0, 1, and tells us that there's continuing probabilities of markets expanding. And that's why I show you the database every night. And I've showed you a number of metrics and how the database is forward looking, because we get trades today, and those trades have a typical holding period. So we have basically a probability map for all 16,000 symbols. And then when you start to combine those and put those together, when you start to get 10,000 of the 16,000 symbols trending, the probabilities become less likely that you're going to see a lot of downside here. I'm sure we're going to see lots of volatility the second that they announce, and more so when Jay Powell goes up. And typically, I'm not sure I have a good feed. I'd probably be able to do something, but the bottom line is we may listen to this together. May not be able to put it on screen. It's not really important, but unfortunately, I have a YouTube TV subscription, and they won't let you display any of the video on YouTube, which is sort of ironic. Let's see here. Yeah, I am a boomer. Somebody's saying the boomers are out of the market. No, we have a network of investment advisors, and most investment advisors live off of boomers and 401ks and stuff, and they're not. Those guys are passive investors, and most of the investment advisors are 60-40, and some combination of that stuff, and some alternative assets mix. But they're all long. They're always long. So you're wrong on that. Just so you think boomers are out, no, they're not. So it's interesting because I won't go there, because there's something that I believe is going on, and some of you, let's say Gen X and millennials, you're going to go forward in the investment world much different than my group did. Most of the people in the boomers and the advisory community were handholders. Because a lot of folks just didn't understand investments. And I can tell you, in the pandemic, in March of 2020, is my first real engagement with retail customers for over 2 decades. Okay, I've been an institutional guy for a long time. I've been at major banks and institutional firms. I'm an ex-Merrill Lynch guy, institutional, and I didn't talk to a lot of retail. And I can tell you, the new retail people out there you folks that are watching here, I'm really impressed. I've gained a lot of respect, and I think that because of the tools we had, you have to understand when I started in the markets, the only people we had all the information. You couldn't go on the internet and Google anything. If you wanted to find out what stocks are doing or everything, for the most part, you had to have a broker, and the broker had all the information. And we solicited orders, and I'm talking. I started in 1979, and there's just the world is completely different. So you have access, you have I think a better educated environment. So I'm super impressed with a lot of folks I've met retail. Really am. So congratulations, and you folks are going to do things much differently. And I've got some ideas that I'm going to share with you folks, not today, but down the road here. Yeah, Warren Buffett is a shill, just for the record. That guy, yeah. Warren couldn't make any money if he didn't have special deals in the government. For the last 30 years, he has kissed up to every administration. All you got to do is look at what happened in 2008. You know everything you know about Warren Buffett. And that's why we made so much money in 2020 when he sold the airlines. I have a good buddy at big institutional firm in London that was told me the rumor around the street that Buffett was trying to get a special deal, and Munition just told the Secretary of the Treasury at the time under Trump, told him to go pound sand. And so he took his baseball bat and went home and said, I'm just going to sell all my airline stocks. And there's a video on my channel that said, take advantage of Warren Buffett's mistake, because there was no way during the pandemic they were going to let the airlines go down. The stupidest trade the guy's ever made. He's made a lot of them. So, I mean, you can get pretty big when a government guarantees your trades, like the Goldman bonds. I could go on and on. So don't get me going, because I'm not a fan of this guy at all. He's a guy who said he doesn't believe in derivatives, and then ended up over half of his fund was in derivatives. Anyway, I can't go there, folks. What time we're getting to be? 32, so we got another 30 minutes or so. Just reading some comments here, folks. Appreciate you guys being very active here. We have about almost 500 people on live here, so that's awesome. Welcome, everyone. So we're just kind of chatting before the Fed. We'll get into some more things. We're seeing the futures, the chart on the far right up here. Actually, it'd be left, I believe on your side. Everything's inverted. So that you can see the futures, that's a 5-minute candlestick chart of the futures with the Wavetech webs on it. And we're starting to see a little bit of clawing back here. We're down 16 handles. We were down 22. So around resistance around 85 right now. We'll get into some analysis here in just a few minutes. Just a great question here. Is the yield curve version any concern? No, at zero. The yield curve has been wrong more than it's been right. No one talks about that because it's not a good headline. And so, just because it's inverted for a reason right now. And primarily what we're seeing on the back end of the curve, I haven't done any yield curve analysis. I owe you folks one, but my opinion's the same. I just need to remind you what it is. But I was talking about how the back end of the curve, the from the 5-year out, 5, 10, 30 part of the curve is going to stay fairly low compared to the front end of the curve, just because it's the opposite of what we saw before, right? The Fed was pushing short rates down to zero. Now they're pushing them up toward 5%. And so the back end is lower. When it was the other way, when they were doing zero, the back end was higher. And the reason why the back end's lower right now is because there are demand issues. And I've talked about this sea change of events. So I got time to ramble on here for a minute. And one of these sea changes are, I started in the market in 1979, came out of Jimmy Carter huge inflation. If you calculated inflation like they did in 1980, we'd probably be closer to 12 to 15% right now. We were pushing 20%, and interest rates went up to, right after when Reagan came in, we went up over 16% on the long bond, 16 and 3/4, and the short end was all the way up to 20%. And we even had a surcharge if you went to the discount window. No one talks much about the discount window anymore, but at that time it was a big deal. But well, from that point there, we went from that environment and switched over. Reagan came in, deregulated just about everything, and then we started to see everything flip over the next 10 years. And then we got into George H. and Clinton years, and that was one of the most brilliant things during the Clinton administration that happened, which was kind of the next change around 1990. You can go through every decade, the beginning of every decade, and you can see this stuff. And what's happening is, if you look back as we came in toward 1990, and then when Clinton got in, it was at 92 roughly. When Clinton came in, Rubin was the Secretary Treasurer, another Goldman guy, right? But what he did was he shortened the duration of the Fed's balance sheet. They were pushing 20 plus years on, and he took everything to started offering lots of 10-year notes. That's where the 10-year came into favor then. And so what they were able to do is rates were coming down, and they shortened the duration. It was like, I put Rubin down as the best Treasury Secretary of all time. He's going to go on my record. Arthur Miller was the worst, and Rubin was the best in my view. And I don't know if I get my buddy Jim Baker watching. Maybe he could comment on the line about that. But those are my feelings on that stuff. But so if we go from there, then we came into the next decade, 2000. We had the dot-com bust, a whole nother reorganization, and then of course 2003 to 08, we had basically restructuring again of how the economy is working, and then of course the GFC, great financial crisis in 08-09, and another restructuring. And guess what, folks? We're at that next level. So we went from the rates structure we were in, the way the economy worked in 2006 up to 8. When that collapse happened, everything got restructured. A lot of almost the same thing. There was no commercial deals. Real estate was hammered for years for obvious reasons in 08, 9, 10. It was really brutal. And then we got Helicopter Ben, and then we went on with Grandma Yellen, and here we are with Powell. But what's happening now is I believe we're about to make another shift in interest rate levels. If I were to go and really spend the time, make a video on this, I would show you how each one of these decades had a different level of interest rates, different levels of inflation, and each one of those had different characteristics on how everything worked. And what I'm telling you right now is that is going to change again right now. So don't look in a rearview mirror for the answers. That's what everybody's looking at right now. The Fed's going to start lowering rates. No, they're not. They're not going to lower rates. I'm sorry. They're going to keep steady. They have to do it. There's a shift. We learned that MMT doesn't work. We already knew it. All you had to do is look at Zimbabwe. Like, find that out. You can't just print money and make things work. So now you have to go more to a actual real interest rate structure that's going to be more sustainable, but also reflecting the relative risk in the market. I'm trying to remember, there was a guy named Gold, I think it was his name. Man, I wish I could remember the name of this book right now. It's not coming up, but it's a really good book, and it's really tells you what interest rates really are about and how to look at things. And interest rates levels typically tell you what type of risk there is around whatever it is. So that's why you have these high yields and higher risk environments, and treasuries typically get the best rating. We all know that stuff. But we've not operated in that environment because the Fed's been keeping things at zero. And the point of that is that we're now coming, everybody thinks what we were doing for the last 14 years was normal. No, that was not normal. What's going on right now is becoming more normal. And I think they're going to want to keep that here, even beyond Jay Powell. Okay, so when Powell's done, whoever comes in next, they're going to keep these policies. I think this is a big shift, you know. So even though we didn't mark the line, we sort of kind of did. The transition started, you know, around the pandemic in 2020, but it's really now where things have normalized. Of course, you know, Biden just told us the COVID crisis is over. Thank God. Thank you for that, Brandon, for telling us that finally what we already knew a long time ago. But the fact is that, you know, everything's trying to, you know, remember, what was it, the new normal? This is the new normal. And people want to go back. They thought we're going back to the old normal. We're going to a new normal. I think that's enough for, yeah, but do your research on this stuff, folks. Just, you know, I've lived through every minute of this stuff. You know, I've been in front of these monitors. I would be willing to bet that over the last 40 years, I haven't spent maybe 3 months cumulatively that I wasn't watching tick by tick on these markets. I don't normally do vacations. The last couple of years I've been taking off, and of course, those of you that are on the channel all the time know I recently had an illness, and that took me off screen, and that was pretty brutal. And of course, I'm not as young as I used to be either. Yeah, so you know, just get ready for something different. And I guess you can't always expect things to stay like to go back. And I think that's what, you know, markets, this is thing. Okay, I'm stumbling all over myself, but think about this. As everybody thinks that since helicopter bend, the way you do it is you throw, you know, the markets start to go down, or the economy starts to go down a little bit, you know, they throw it in. Look what happened with the JOLTS numbers today. Look at all of the numbers that came out. It was a mixed picture today, right? JOLTS up at 11 million again. The jobs are everywhere. You know, they can't beat this down. And, you know, I kind of jokingly said the recession was last year. We had 2 quarters of negative GDP, and of course they want to redefine, well, that really wasn't a recession. They should have just accepted it as a recession, and they could have changed their dialogue instead of trying to act like it wasn't something. And, you know, and I remember back in those days, and some of you have been around the channel, I see a lot of common names and people I've seen around for a while, is, you know, you can remember, you know, that I said, I think we're in a recession now, and of course we got the negative quarter. Even going back to fourth quarter of 21, it looked like everything was starting to falter. And that was fairly realistic. Now, I can't find the recessionary numbers, and what everybody's doing is telling us what's going to happen. Now, I do believe employment will start to soften a little bit. I'm working on a project. I'm going to get a screen set up that I can put this together. The nice thing with TradingView, they have a lot of the government reports and things are built into the data, and I can run indicators on them. And I've run some stuff, and it does look like employment's going to maybe tick up. I don't think it gets much over. If it got to 4%, it's going to be a big deal. So let me see what you guys are saying while I've been rambling on here. Yeah, Mark, yeah, there's no reason for him to cut. Yeah, I'm just looking at some of your comments here, folks. Okay. Yeah. So, yeah, I'm just looking at, yeah, I don't know. Somebody's asking me about David Hunter's. I don't know who David Hunter is. Yeah, I don't know. I don't know who that is. I I live in a bubble. I don't follow anybody else. I don't look at anybody else's work. I do mine, and I tell you folks what's going on, and that's pretty much it. But I don't know who that is. Um, yeah, I'm just yeah. Here's something here, and like I said, we're about quarter till. We'll get focused in on what the markets are doing. We're back at -20 on the S&P right now on the futures. NASDAQ is -20 as well. So they're pulling back a little bit. You can see that chart up on the far left. It's starting to pull back just a touch. And we'll start getting focused in on that here in just a few minutes. Yeah, it's interesting. Nat gas is about free, but my bill has doubled. Yeah, that's an interesting comment because I have a theory whether it's postal stamps, gas, electric. Once they raise them, they never go down. By the way, they never go down. I mean, you can watch. It was interesting. I was in Texas at Christmas time, and I was seeing 2.25, 240 gas everywhere. When I left Arizona, it was 475 plus everywhere, and so it was not quite double, but it was pretty close to it. And so, yeah, I don't know what goes on. Maybe you could argue Texas has the oil, so there's not a lot of shipping costs and getting the oil to the redistribution points, gas stations, what have you. That might be maybe what's going on. But electric, yeah, I think I will say this: probably Texas probably has the worst electrical regulation, and the way that it's configured with all the independents and all that. That's just a cluster. That's just a nightmare there. It's crazy, especially if you live out in rural areas. It's just, yeah, it's bad. It's bad. So, but once it goes up, it never comes down. I'm just looking at a couple of comments. Yeah, folks. So let's start focusing in on the markets here and just what's going on. We'll go through some charts. I want to look and see if we can get a feel as we come into the news coming out, what's going to happen as far as if the algos. We'll go through. We'll set up the hourly, the 5-minute. So we'll take a look and dive into the S&P. So let's go ahead and let's just do that real quick here, and I'll even make it official. All right, so let's take a look here and see what we can get set up. This is the hourly. So sort of interesting here. We've got some couple things to look at here, folks. So this is expectations as we go through the next hour or so. Looking at the market grid, I know it's fairly small. It's on the bottom on the, I guess it's your left, I believe, is where the scale should be on the right side. But anyway, we're looking at right now, the last print here is 68. We've had a low of 65. S1 is 63. This is the hourly market grid. 70 on the F sides is 70. Actually, R2 is 40, 75, 38. So we printed 76 even and a low of 65. So we've done basically S1, R2 on the hourly. And of course, we'll have an update right as this news comes out. The one thing that's staring at us here is there's some fib targets on the downside: 40.57, 44, and 40.36. So so we're starting to see, like I said, starting to see a little bit of a bid. So it looks like the next hour we're going to see things probably stay above the 40 period right now. Let me get some values for you. So I'm actually going to make some notes of what I'm talking about here so I don't forget what I told you as we go forward. But we're looking at the 40-60 level is going to be a support level we're going to watch. We could see, like I said, S2 is 58, all the way down to STX on the hourly is at 40.50. We'll see what kind of update we get on the next update. But it does look like some weakness as we move toward the close. It looks like that's going to be the thing there.
Order filled.
So as we go forward here, so let's go and take a look at, let's go to a 5-minute chart. Let's see what's setting up here. What time we got here? About 9 minutes. So let's take a look here. Get to a 5-minute chart. So right now we have no fib targets. 5-minute algos are suggesting some pretty decent downside. Probably be looking at the 200 period moving average, which would be down in those extremes at 40, 50, 40, 40, 46 is the 200 on, this is a 5-minute graph we're looking at now. And so that's going to be, the primary place for us to watch for support. And this market grid will probably run, I'll probably run the 1 minute. So let's go there as we come into this. Let's just take a look and see what the 1 minute chart is. And we've got a number of metrics running here. So the 1 minute suggests we're going to bid up a little bit here as we come into there, and then a little roll. So we'll watch this once we get the news, see what kind of crazy volatility we get. We'll watch this, but this right now is there are no downward targets at the moment here, and so it's interesting. So folks, this is the indicators that I offer for TradingView, and this is running on a 1 minute chart. So we're looking at this configuration. I'm just making it large enough that you could see the scaling. We actually have some little Fibonacci targets in here: 57, 58, 58, 64. So we're seeing just a little bit here. Like I said, it looks like it's forecasting that we're going to bid up right into the hour, into the Fed. So maybe a little short cover, and we'll see if that actually happens. But that's what the algos are telling us at the moment. Yeah, so Gil, the reason why these algos are telling you, these are 1 minute. So these are micro trends within larger trends. So when you start to join us sometime in the live room, we talk about how these increments, 1, 5, typically I go 1 and 5 for day trading, and then we'll go to hourly and daily, and all of these increments break down. So it's one of those things. So let me see. While we're sitting here, I want to make sure I have that I've got some things set up here. Bear with me 1 second so I can get this out of here. I thought I had something set up for the numbers. Let me just double check everything, folks. I thought I had some things set up. I got too many open browsers here. Like that. Okay. So you can see, just as the algos are predicting, we're starting to trade up here. We're now 59. So this algos right here, they're now telling us right as we get into this coming this last 5 minutes, we're starting to peak out. It'll be interesting to see how everything sets up here. Yeah, 5 minute. Let's flip over to the 5. Let's just put this over here. So we'll do a 1 and 5. 5 minutes at the moment. More stable to the upside now. The algos are updating here. These are really interesting, folks. Been in the live room, you know what's going on with the volatility, with what we're likely to see here. I'm kind of struggling. So bear with me 1 second. I'm trying to get. So what I'm going to do, folks, let me know if you can hear this, okay?
Future increases. Can they say, well, there may be some further tightening in the federal funds range or something like that? Because they've got to get, I think they need to back out of the idea that they're locking in 2 more rate increases after today. We get 25 basis points today. I think that's unwise. I think it would be even more unwise to do another 2 rate hikes in March and May.
Cameron, I know that all three of you basically agree that a quarter point is baked into the cake here. But I want to pick up on something David just said. When is this all going to end, Cameron? When are they really going to stop this rate increases? Is it this meeting? Is it next? Is it May? When?
Well, if we believe what the Fed says, it would look like May, because the Fed has given guidance that they want to see rates above 5%, which would imply another hike in May. And I really think it's the question of how much they want to push back against the rate cut bets in the back half of this year, because we
Okay, I just have to cut my mic off so it doesn't echo there. So I will do that when we listen. Yeah, it should get okay. I'll make sure I cut off my mic. So we're just a couple minutes. So I want to go back to that 1 minute chart here. Look at this. Algos predicted we'd rally right into it. We actually went from 58 up to 61. Not a big deal. It's a 1 minute chart, but this is now it's suggesting we're going to flatten off here. Looks like we're going to try to turn. Look at this rally. So somebody said you can't. There it is. You guys can see it. So it's telling us 1 more minute. Guess what? That's right after. Then we should peak out right in here. We're trading at RXT on the 1 minute right now. We look at that 40.65.28, 40.65.36 was the orange lines. That's the market grid that I talk about every night. We hit smack on STX and we backed off of it. So this should be probably last minute or so. So I'm going to. I think there might be a little bit of delay in this, but I'll put this sound back up. So let's just listen to this. Yeah, those of you who've been around, there's a fade trade. Look at this. We already hit right on the minute. It said would peak out. There it is. Algos are turning down now. Here we go.
Mostly because of energy prices, which are starting.
Let me know that you guys are hearing this.
And because we've seen so much resilience within the labor market, look at that JOLTS number today. We don't think it really gives the Fed much wiggle room in order to become accommodative, because the Fed is very afraid of inflation coming back, which means that they've continued to say there are greater risks of under tightening versus over tightening.
Jim, I'm going to save the first word after the 9 seconds left before we can go to Steve Leisman. The Dow right now down 300 points, and let's go to Steve with the Fed's decision.
Here we go.
Federal Reserve raising by 25 basis points to a new range of 4.5 to 4.75. This is the 8th straight hike by the Federal Reserve since March, up by a quarter to 4.5 to 4.75. The Federal Reserve sees ongoing increases as appropriate, so that phrase that some thought might come out remains in. The Fed is still en route to a level it calls a sufficiently restrictive level of the funds rate. One little bit of dovish commentary here says inflation has eased somewhat. However, it says it still remains elevated. The Fed is signaling a new focus on the extent of rate increases and not necessarily the pace. So it says in determining what it now says is the extent of increases. That word had been pace previously. So it's not thinking about it going up by 25. It's thinking about how far it goes at this point. On the economy, it sees modest growth in spending and production. It says job gains have been robust. The unemployment rate is low. All language from the prior statement. The decision was unanimous, with the 4 new voters replacing the prior 4 who were out there. So, Kelly, back to you. Up a quarter. Still thinking about ongoing increases. Still heading to a sufficiently restrictive level.
Any dissent, Steve? That's a pretty big deal that they left in the word
unanimous.
ongoing. Wow.
Yeah, they left in ongoing means they have more to go. I guess that's pretty clear. And they're not backing off any.
Okay, folks, just trying to get the logistics. So this was that fade trade. You fade it. I did not do it today, but well, this is really a typical pattern here, folks, that is set up. And what happens is you get that reaction to the news. They did the quarter, and they're already starting to froth at the mouth, talking about this that we're getting. They left the word ongoing in. Oh my God, they left ongoing in. I'm telling you, folks, they are not going to change course. There is no, and the markets will probably stabilize here. One of the things that's happened on the chart that I've got up here, I'll stay on screen here for a minute. Yeah, I did. I just trying to get all this logistics. Yeah, be careful. You can disagree, but you can't call me names and do stuff. You'll be out of here. So anyway, but we're getting the reaction down here now. So we're getting this volatility, and I want you to watch what happens. I'm going to go full screen so that you can watch this. And what you'll see is the market grid gets what I call, it's similar to what happens in Bollinger Band, but they're different calcs. Is you get those big bubbles in Bollinger and this, you get these big wide swings, and all of a sudden you'll see a contraction, and it'll take about 4 to 6 minutes for this to happen. So we're probably locked in a range. Right now, the market grid, this is on a 1 minute graph right now, it's giving us a range of 40.36 to 40.62. So 30 handle volatility range right now. Typically, we'll probably stay within S1, R2, or R1, S2, something like that. This will start to stabilize. There's already doing it. You can see the market grid is starting to, it'll collapse in. And in fact, I'll draw this in because I want you folks to see this and then we'll get into talking about what's going on here, because that'll be more important. But basically, what's going to happen is the market grid will start to basically collapse in. So the volatility, as these bars, they'll start to collapse, and then we'll get over into here, and the bars will come in and out of here, and then we'll decide whether we're going to go down. Then we'll decide whether we break to the downside or we go up, and what may end up is that we we end up in something that's even, some kind of box where we just start trading within these parameters, and we just get a big volatility, and then probably in the next hour or so we'll see something happen. But for the most part, this was as projected. The 1 minute algo projected that we would rally into the hour, which it did, and then we would turn south. This is the 1 minute here that you see on the screen. Now it's telling us, I'll show you something here. Let me can all this stuff and we'll get live again. It looks like in about a few minutes here, we've got a shot at of this market turning back up. And so we'll see what happens. Yeah, I agree with, it's a nothing burger. And so that's good. That'll give us some chance we get this stabilized and we can ignore what's going on. And then what we'll do is we'll see maybe we can get into some other analysis and maybe even cover some individual stocks and do something that's more interesting. We'll see when Jay Powell comes out. But look at the market grid, how it's already collapsed. Now, instead of that 30 handle range, now it's 53 to 63. It's 10 handles. So volatility is starting to come into normalization already. And what's interesting is we're trading right where we were before all this happened. So we had this little blip down, and now we're trading right back into this that 60 handle. Remember I mentioned that 55, 60 in this range here, that we're just right back in there. Yeah, and Greg, just your last comment, that's exactly what I've been saying. They're not going to pause. And it's not even that important that they don't. I don't think people get it. So yeah, so here we go. You can see the 1 minute algos are projecting higher prices again. We had that turnaround, and there we go. Let me change the scaling a little bit here. Yeah, all the way back to 80.
Order filled. Order filled.
So here we are, only down 8 handles on the day. Based on this 1 minute algo, it looks like we're probably going to try to print them up. See if we can go positive. Down 6. Down 575, printing them up. Let's flip over to TradeStation here. You can see this big rip around right here. So you'll see so we're down 8 right now. Looks like just this volatility on this 5 minute chart is just blowing up too. So this is pretty typical. It will do the same thing that we did on the other chart. So let's go back, take a look at the 1 minute. You see that now we have an upward channel. Now it's suggesting we're going to go back down here. So we've got 1 more minute to stabilize, and then we're going to start to see it roll back here a little bit.
Order filled.
So we'll see if that is what's going to happen, and we'll see what Powell says on his presser. We got 20 minutes before that comes up. I'm trying to bring something up here, folks. So I've got the Fed's YouTube channel up. I think they will show this live. I'll see if yeah. So 2:30 they'll bring that up live. So I'll bring up the Fed's channel there. So the algos are suggesting we're going to see a little downside here. You should probably come back and test this right here, this 10-period moving average back to that 60 handle. So we printed up to what, 72 on that high print there. So what the algos are telling us right now is that the 10-period moving average 61, it's rising about one handle per minute. So we'll get up. There's a pivot right now at 62.15. So if we stay above that, we'll probably at least start to consolidate a little bit here. Give me 1 second, folks. Just quick break. Hang on. Okay, looks like things are just continuing to stabilize here. I just realized I had the cash, not the futures up here. So this is interesting. We're getting some downward Fibonacci targets here, 59, 49, 42. Algos are starting to suggest we're going to flip to the downside here. We'll see if that we get confirmations. You see these red dots down here. These are the fib targets. Yeah, so it's starting to turn as we speak here.
Order filled.
Yeah, so we're below the 10 period moving average. We're using a 1 minute chart here, folks, to see how this thing, we start to play out here. We only got, I mean, this volatility is crazy. We're looking at somewhere around, these swings are happening in 2 or 3 minute swings. So we're going to have support here at 74 and then 71. So I apologize that I had the cash up there. I thought I had the futures. I was wondering why I was looking at another, I have another monitor I'm watching and the prices aren't matching up. That makes sense. I want to pop over to this screen here real quick. Just, matter of fact, let's go over here. I just want to see some of the things going on here. 10-year is 347, pretty much where it was. Nothing's really changed. Dollars just kind of down a little bit. So I just want to do a quick check-in. Gold's printing down just a little bit. Futures at 77. So we're starting, let's go back to the 1 minute graph. You'll see we're starting to get the decline. Algos are suggesting we're going to, there's a pivot right here. I just was mentioning, I call it 62, but it's actually, the number is 73.40. So we can get through that level. There's some support here, 75 to 74.30. We break through that. We'll probably take out the 200 on the 1 minute and maybe head toward this fib target one, which at 59. We're starting to see a bit of selling coming in right now. And I'm looking at the 5 minute. I have another monitor, so I'll just share what I'm seeing there. 5 minute, we're just traded S2 on the 5 minute. S3 is 66. So we're seeing some pretty decent move down right now. We just took out those pivots. We're trading the 200 on the one. Algo says 1 more minute on the downside. And yeah, I did.
Order filled.
Yeah, I did put a short on here. I shorted just a quick little scalp here, but we're starting to see this volatility kick in here just a little bit. And like I said, we're trading right on support. Still looks like there's some downside in here. Getting toward that pivot right here at the 69 level. 59 is a possibility all the way down to 49. We could see a pretty big reversal here. This actually, the algos are suggesting that this minute here is the final minute of this decline. The fib target's just updated. We just got an update, so it looks like a little bit of reprieve, maybe back toward the upper end of the grid here. But we're just kind of watch this thing trade and into the Paul come up in about 10 minutes, and I've got the Fed. Maybe we'll be able to watch this stuff together. Algo's turned up now. Started probably going to get just a range here, folks. This is pretty typical. I think market's going to stay fairly stable before Paul speaks. We'll try to listen to it. It's really difficult to watch this stuff. So I'm going to, you guys that are watching this, if you would comment on the timeline if he says something, and just so we can go and look at that. But I'll put up the Fed's live site. Let me just I've got it on the other screen. they've got some music playing, so I'll wait for him to come up over there. So just let me know. Yeah, so algos are starting to turn up a little bit here on the one. Looks like, I mean, what we're seeing here, and these algos are what's called auto regression. It's a Berg method. All it's doing is predicting. I was talking to my original partner yesterday when we built the portfolio management models many years ago, back in the 90s. I was talking to him. I was telling him about these algos, and what they are is they're rather than trying, if you use AR auto regressions and things like that to predict price, you're better off with a dartboard. But when we look at these indicators have more of a predictable pattern, and they do an amazing job. I was telling him it's sort of like having tomorrow's Wall Street sometimes, because the other day when the market was up big yesterday, the day before, the algos were all turning up on a daily, saying that was the bottom of the range, and we were going to kind of basically move up into the Fed meeting, and that was yesterday, right? So that happened, and it was based on this. So you can see the algos are starting to turn up. We're back over the 10-period moving average. What this indicator right here is telling us is that we're going to potentially get back above the 10 and stay above the 10-period moving average, but there's not a lot of upside. It looks like we're still probably going to go into some consolidation. Somebody's calling this a nothing burger, but that's basically what it's been so far, because we're right back. Let me just bring up on another screen here so I can see this price. We're down 14 handles. We've been trading here all day. We traded up to almost on change early this morning. We dropped down to -10, then we went -14. We're down -24, and now we're back at right where we were at, not too long after the open this morning. So markets have been pretty stable, because guess what? Everything that everybody thought was going to happen happened. And, they left, we'll say how long it was funny that the CNBC folks are going, oh my God, they left the word ongoing. Like this was not that word, not ongoing. But that's exactly what's going on here is markets are responding to how they should. Now it looks like, what's being projected by the algorithms, I've got pretty good experiences. Two things that I have in my favor, and I'll come up on screen here. I have in my favor, I have been watching these PPMs that I developed since 1984. So I've got 35 years. I know how these things act. And then when I see these algos, what they're doing, then it's very easy for me to see them, because I know how they respond. They go within a range. There's some things that I've talked about a lot for, as far as this angle of attack theory that we developed way back in the 80s. And that's really, they only go within a spectrum. They will get expansive sometimes and elongated trends and stuff, but they basically do, like, they're not 0 to 100 meter like RSI or stochastics, where they get overbought, they just crawl along the top, or oversold and they crawl on the bottom. They're actually able to, the stronger the market gets, it's more of a pure measurement of momentum and angle of attack than it is looking at some RSI or something. I deem that completely useless in probably 1981. I mean, there weren't very many indicators around 1981. Guys like Jake Bernstein, Larry Williams, and those guys were making up stuff like crazy, and most of the stuff they made didn't work. Most of it was snake oil. But the stuff that's out there, you have to understand, we were real traders. we had to find something that worked. We weren't just trying to sell an indicator and write a book. So this was all came out of pretty good research. So this is interesting. We got a new update. Let me go full screen so you folks can see this. So we got a new update, and the old fibs were targeting down at 59.49. Now it's picked up another pattern. This is once again still on a 1 minute chart. Maybe you folks think it's a little short, but you'll see this is very useful. We're now projecting for another move, potential move down. You can see the red down here. The way these indicators are coded, the white is for the 10-pair moving average, the red to red, and cyan, and so forth. So what's being projected now is a move down to 61, 54, and then 50 is the extreme. So right where my cursor is here is where is the first target. And if you notice PPM1 on the far right, I've got these big labels so you can see them, is a minus 0.6 right now. PPM2 is still slightly positive, but it looks like it's going to roll over pretty drastically. So let's expect over the next, we'll call it 8 minutes or so, we'll stay with, Powell's going to be up here in about 4 minutes. So we'll listen to what he said, but we should see some downward movement. Once again, this is probably about when he starts talking. So we'll see how that happens. So Jay Rendon, I've personally known Larry Williams for a very, very long time. So we used to do a tag series seminars together back in the 80s. Yeah, we'll take a look at stuff. We'll stay with this and Powell talks, and hopefully we can diverge from all this stuff, and we'll go over and we'll talk some longer term stuff. I would love to have opportunity to work with some of you and maybe cover some individual stocks, do some other stuff than what we normally do. Yes, Jay Rendon, these are the indicators. What you're seeing on the screen is what you get. There's actually 9 indicators. There's cycles, there's a pattern finder, and the PPMs, and yeah, so there's 9, and there's video series, so you look at them and you get live room. You can get into the live room. Yeah, so FFE4, just along those lines. I've been talking about that. You know, if you're going to come back and onshore and all that stuff, I was actually having a conversation last night. Let's see here. I'm not going to get into that because Paul's going to start talking in a minute. But I'll try to remember just on the whole onshoring thing. And this is so let's see if I can get Paul up here. I've got him on screen, so when he comes live, I'll slide this over, and hopefully we can hear everything, and we'll put that up. Yeah, so Bonita, the Fibonacci Queen, is a personal friend of mine for 35 years. Carolyn and I have known each other forever. You know, so we're getting all of a sudden we're getting the bottom of this pattern is set up. Yeah, if you're on with it, just mention my name. Yeah. So remind me, FFE4 to come back to this. I'm waiting for Paul to come live. Let me make. Yeah, so I'm just hoping that I'm gonna mute this out. Is he about to come on? Nope. So I'll mute that out. But look at the algos; they're starting to turn up already. And this is what I was telling you. These things are. This is just. I'm going to draw in something real quick. Of course, as soon as I put this tool up, he will come live. But let's. I just want you to see what we're probably seeing is something like seeing this. We're already starting to come up. We actually have upward targets now for 81, 84, 86 on the upside. Algos are slightly turning up. You can see this one's turning up. This is sideways, not a big deal because it's longer term. And so look at this big reversal. Did he start talking? Because I don't see him. Hang on. Yeah.
Inflation back down to our 2% goal. Over the past year, Good afternoon and welcome. My colleagues and I understand the hardship that high inflation is causing, and we are strongly committed to bringing inflation back down to our 2% goal. Over the past year, we've taken forceful actions to tighten the stance of monetary policy. We've covered a lot of ground, and the full effects of our rapid tightening so far are yet to be felt. Even so, we have more work to do. Price stability is the responsibility of the Federal Reserve and serves as the bedrock of our economy.
Right to those fibs targets. Look at that.
The economy does not work for anyone. In particular, without price stability, we will not achieve a sustained period of labor market conditions that benefit all. Today, the FOMC raised our policy interest rate by 25 basis points. We continue to anticipate that ongoing increases will be appropriate in order to retain a stance of monetary policy that is sufficiently restrictive to return inflation to 2% over time. In addition, we are continuing the process of significantly reducing the size of our balance sheet. Restoring price stability will likely require maintaining a restrictive stance for some time. I will have more to say about today's monetary policy actions after briefly reviewing economic developments. The U.S. economy slowed significantly last year, with real GDP rising at a below-trend pace of 1%. Recent indicators point to modest growth of spending and production this quarter. Consumer spending appears to be expanding at a subdued pace, in part reflecting tighter
right to the fib target 3, it's bouncing a little bit.
Activity in the housing sector
are turning
continues
up.
to weaken, largely reflecting higher mortgage rates. Higher interest rates and slower output growth also appear to be weighing on business fixed investment. Despite the slowdown in growth, the labor market remains extremely tight, with the unemployment rate at a 50-year low, job vacancies still very high, and wage growth elevated. Job gains have been robust, with employment rising by an average of 247,000 jobs per month over the last 3 months. Although the pace of job gains has slowed over the course of the past year and nominal wage growth has shown some signs of easing, the labor market continues to be out of balance. Labor demand substantially exceeds the supply of available workers, and the labor force participation rate has changed little from a year ago. Inflation remains well above our longer-run goal of 2%. Over the 12 months ending in December,
Algo's turning up.
prices rose 5.0%. Excluding the volatile food and energy categories, core PCE prices rose 4.4%. The inflation data received over the past 3 months show a welcome reduction in the monthly pace of increases. And while recent developments are encouraging, we will need substantially more evidence to be confident that inflation is on a sustained downward path. Despite elevated inflation, longer-term inflation expectations appear to remain well anchored, as reflected in a broad range of surveys of households, businesses, and
Resistance
forecasters,
4065 right now, 4065.
But that's not grounds for complacency. Although inflation has moderated recently,
Just blew right through it.
The longer the current bout of high inflation continues, the greater the chance that expectations of higher inflation will become entrenched. The Fed's monetary policy actions are guided by our mandate to promote maximum employment and stable prices for the American people. My colleagues and I are acutely aware that high inflation imposes significant hardship as it erodes purchasing power, especially for those least able to meet the higher costs of essentials like food, housing, and transportation. We are highly attentive to the risks that inflation poses to both sides of our mandate, and we are strongly committed to returning inflation to our 2% objective. At today's meeting, the committee raised the target range for the federal funds rate by 25 basis points, bringing the target range to 4.5 to 4.75%. And we are continuing the process of significantly reducing the size of our balance sheet. With today's action, we have raised interest rates by 4.5 percentage points over the past year. We continue to anticipate that ongoing increases in the target range for the federal funds rate will be appropriate in order to attain a stance of monetary policy that is sufficiently restrictive to return inflation to 2% over time. We are seeing the effects of our policy actions on demand in the most interest-sensitive sectors of the economy, particularly housing. It will take time, however, for the full effects of monetary restraint to be realized, especially on inflation. In light of the cumulative tightening of monetary policy and the lags with which monetary policy affects economic activity and inflation, the committee decided to raise interest rates by 25 basis points today, continuing the step down from last year's rapid pace of increases.
Market's going vertical,
Shifting
folks.
to a slower pace will better allow the committee
Algos
to
are-
assess the economy's
look at the
progress
algos.
toward our goals, as we determine the extent of future increases that will be required to attain a sufficiently restrictive stance. We will continue to make our decisions meeting by meeting, taking into account the totality of incoming data and their implications for the outlook for economic activity and inflation. We have been taking forceful steps to moderate demand so that it comes into better alignment with supply. Our overarching focus is using our tools to bring inflation back down to our 2% goal and to keep longer-term inflation expectations well anchored. Reducing inflation.
I can't handle it. I got to talk to you folks. Yeah, so a couple of things that happened. I got long on this thing down there on this dip. This is pretty crazy. We're now looking like we're going to go positive on a session. R1 is, I'm going to bring that up. There's just no way. That was just too crazy. We went right into fib target 3. That was the point where you want to, where you wanted to buy. In fact, we're down only $4, $3.50 now. Pretty crazy range here. The volatility has just screwed up all these charts here. Let's go back to trading view here, because the 1 minute is continuing to suggest we're going to see some more strength for a few more minutes. And we're positive on the session now, trading 92. This is very close to making a new highs on the session. 92.75 new highs. Just this thing is just vertical. I love punishing all the bears out there. Yeah, so I want to go over and get some numbers here real quick for you, so we have this. But we're looking at almost pressing 4,100 here, and what I want to bring up here is this. Let's get the E-minis. I want you to see Right now, R1 4105. I think we came pretty close to printing that right at 4100. After that, R2 4122, and the RXT is 4154. And these fib targets that I've been talking about are still very valid here. Let me bring this up just so you can see this. This is exactly the pattern I've been talking about. Is right now, let me get this number. So 4136 is high target 1. High target 2, 4226, 4281. That's these dots that you see on the page here. So let's go back, just see how this thing is setting up here. We're probably getting a little frothy. It looks like a couple more minutes here. And I'm taking the money on this thing.
Order filled.
So, but that was one heck of a run, folks. We went from 40-60, that was 45 handle move in about 10 minutes. That was absolutely nuts. All right, so I couldn't get through that, but we're pretty much printing up here right at R1 right now on the day. So we're going to watch for some kind of rejection. It looks like the algos on the 1 minute are getting a little frothy up here.
Order filled.
So right around this 04, there's probably a scalp off of here back into the 90 handle. From here, you just got to be really careful on days like this. 06 high on the futures right now. So like I said, it looks like the algos are starting to print down. It says we're going to challenge the 10-period moving average, and that's going up right now. Let me get some numbers for you, folks. 4080 is going up about $1. So probably the target range is going to be around, I'm going to call it 88, 90. We're going to come back in here pretty quick, I think. So that was a pretty good move there. And I did get a short off pretty much on the high bar there. It little tenuous though, because there's still a lot of residual buying. This is the chart here, though. I want you to see is this volatility chart. We got an RTX sell on the 5 minute. Typically what's going to happen here is they're going to fill into here. We'll probably come back to 85, 84, something like that. We'll see how this thing goes. This is actually kind of a bull pennant here on this. We just printed a new high. We're trading 09 now. So we could run to 22 very easily. But this is projected to be the high bar on the algo. This is one of these classics where the next bar is likely to be down. We traded as high as 13.
Order filled.
Typically, after a move like this, we'll trade back under the handle. May not be the case. I mean, this thing is just running big time. Nobody wants to sell. There's another new high, 14.25. Forgetting 22, I think was the R2 on the dailies here. But the algos did say that this last bar, we actually got an RTX sell on the 1. I'm going to put something up there. I'm going to show you folks something that's pretty interesting. There's another part of it. It's called the webs. And I just want to see one of the patterns that we get a lot of times out of where we are right now is something that's where it gets into what I call a veil top. There was a mini veil right here.
Order filled.
And to see if that can get things going there from that standpoint. Algos are suggesting little backfilling, probably staying within the market grid here right now. So we'll stay with this for a couple of minutes. Hey, thanks, Sid. Appreciate it. That's awesome. Yeah, so we should come back at least test the 4100 level, and if we get under there, probably 92, 90, something like that will be a pretty good point here. And what I'm looking for to see, let me just broaden this out so you can see this pattern just a bit more. So what we'd want to do here to get a veil top is we need to take out, this is a 1 minute chart, folks. So we need to take out last minute's low, 0650. We can take that out, then you can roll this chart a little bit. There's still a really good bid in there. I'm watching the time and sales. We've got, this is pretty, we just made new high all the way to 16. They're almost to that 22 level.
Order filled. Order filled.
There's 22, 23 print.
Order filled.
Yeah, you guys put way too much weight on what the Fed's saying and doing. This market is running on a whole nother narrative. Yeah, a one-time fee of $297 on the indicators. That's it. I want you guys to have these things. So we just traded 24 new highs again. So now after trading here, the R1 at 04 is the number to watch for. Let's get over there real quick. So look at this all of a sudden, folks. R2, 22. So we went all the way up to 25 even. R2 was 22. A few folks remember, but last night I was talking about S1, R2. We actually printed down to S2. We've done an S2, R2. That's 2 days in a row. And now we're up 0.76. We're down 1%. This thing has just ripped the face off of everything. Pretty typical Fed day, I think. Thanks, Sid. I appreciate it. And you're right. It really is. Yeah, what we're seeing here on the algos is it's starting to back off a little bit, but the PPM 2 and 3 are staying positive, but they're way down here. So these moving averages have to catch up with the action. So we're starting to see a potential of a beginning of a veil, and that would be fairly substantial here.
Order filled. order filled,
Crazy activity here, folks. I'm just watching some level 2 action here. But there is a huge bid coming into this market right now. So we've had almost a 2% swing on the day.
order filled, Just a complete reversal, traded 29 there. So we traded 29, now we're almost back to 22 again. Thank you, Equity for Keeps. Appreciate it. Yeah, so we're holding, if you notice, we bounced off this 10 again. It looks like another couple minutes here. It looks like we're going to roll, and we should come down and test this 21 period moving average. And those of you who might be new to the channel here, I spent my entire career understanding basically 3 moving averages. I'm an Elliott-tician. I don't really talk about a lot of wave counts anymore because I just use what's called Wavetech, and I understand what position we are in from the standpoint of where the market is. So we're above the 10. This is most likely about to complete. We're trading 2105 now is the 10. We're trading 19, so we just took it out. So we should start to see a little bit of downside, and we should test this 21 period moving average. It's right now at 4103. Remember, it was 97 a few minutes ago. So we're going to look. 4103 is also R1 on the daily. So once you go through these market grid numbers, then the previous number, R1, is now support. So we'll see if we can get some downside. It looks like we're starting to set up the veil on the 1 minute. And a lot of times these fail will roll all the way to the 40, which is right now down at 90 on the 40-90. I'm not sure we're going to get that kind of weakness, but the algos are starting to get very, very weak and suggesting that we're going to see at least a test of the 21, but it's coming up. You have to remember every minute it's coming up quite a bit. So, and so if you hear any order filled, I'm actually taking profits on some shorts if we get down just a little bit under 16. Hey, John, thank you, man. Appreciate it. You have no idea, like in the live room and the people that I've gotten to know through the indicators and all that, it's been a great honor. You guys will be happy to know I'm working on an article that really goes in depth on the PPMs and all that. It's going to be probably an epic paper. It's probably the beginning of a book is really what it's ending up to be. So I have a Substack, kindlereport.substack. I haven't released anything since for about a week, but I will be putting some articles and some other information out on there. So it's free, no charge. Just go over there and you can get hooked up over there. Yeah, so you get a live room with the indicators if you buy them. Or you can buy the live room and you get the indicators, either way. So yeah, just need a little more pressure coming in here. Look at this, we just got some fib targets popped up in this last minute update. And we're looking at 99, 88, 81. So that puts us right into those moving averages. We're coming up to the 40 because, I'm sorry, the 21 period moving average now is 11.
Order filled.
Okay, there you go. So these are taking little profits off the table here.
Order filled.
Oh boy, thank you. Appreciate the business. Yeah, Eric, that's true. I think you've been in, right? Yeah, so we got the veil top setting up. If we start to hit, so we're setting here on support. Right now, PPM2 is at a 0.42. You see it in red over here on the right. What that means is there's a substantial support at that value of that moving average, which right now is 41.13. So we just bounced off of that level. In this configuration, we probably stay around the 10 and above the 21. The algos are suggesting in the next minute, they just got an update that we're going to get a little weaker here over the next 5-10 minutes. Maybe we hit fib target 1. That would be very nice, actually.
Order filled.
Yeah, so they're printing them down.
Order filled.
They're printing them down right into some really pretty good values here. So if we get any crossovers, these webs are very interesting.
Order filled.
Yeah, so I just covered balance of position here. Looks like we're going to get maybe a little pop, try to get above the 10. There we go.
And then the market grid just turned up. There's going to be some residual buying here, folks. This has caught a whole lot of people. I know that folks are saying that people are bullish. I can't find them, but evidently they're out there, so you guys say. Oh, is that what he said? Disinflationary. Thank you. You guys got to be my ears here. I can't stand. I'll go back and skim through this this thing later today, but it's kind of hard to watch that stuff. Look, here we go. So covered all the shorts. Looks like PPM1 stabilizing here. We're seeing the algo start to moderate here a bit as we trade up. When you have a veil like this, the veil actually has failed. We've got, it's kind of hard to see these lines here. Maybe, let's see here. Let's see if I can show you over here. Might be an easier way. But you can see when you start to get crossovers here, you can get those type of patterns. And that's where you get those. It gets a little crossovers. It tells you that we're probably going into some kind of sideways pattern. We still could hit these downward targets, but I think we stay probably above 4,100. So there was a high 4150 range, and RXT is right there for today. And I'll show you the daily algos here in a few minutes. Yeah, John, I agree. Yeah, they've caught a bunch of people flat-footed here again. Yeah, I'm going to show you guys something. I have not released this, but we are seeing a little bit of a bid come back into the markets here. And we're setting up actually on the 5-minute. We haven't been there. This is the 5-minute. Let me reset this. We're setting up a potential dragon head formation. 5-minute is actually showing more strength coming back in. So we might see RXT today. We may see the 50 handle on this thing. We printed 29 already. And there was a nice little reaction there, a great trade opportunity. There's actually a pivot at 4103. As long as we stay above that, we're probably going to consolidate. This will probably end up being a dragon head formation. 5 minutes algos are continuing to suggest that the moving averages are going to come back up and under here and look like they're going to hold support. So that is going to be a pretty good place to be there, I think, from that standpoint. We're just going to consolidate up here, maybe, just maybe. Let's go back over. Let's take a quick look, real quick here, and let's see what we've done so far here. Here we are. 22 is R2, 39 is R3. So we almost touched on it. We're 10 handles off of R3. And then above that, 4154. That tests that old high that we had, folks. And I'm telling you, right now, if I come over here, our model's got a buy signal on the S&P at 39.14 on the 10th of January. Okay, and that is an ongoing trade. And we've got Fibonacci targets right now. I mentioned these earlier. Minimum target 4136. We've almost satisfied Fib target 1. And these started generating on the 25th of January when we were trading the close that day, 39.63. We got the Fib targets of 41.36. Same kind of there was no way we're going to see those numbers. Here we are trading the highs, just made a new high in the day. But the reality is that this trade has continued, and I believe we're potentially going to enter into a phase where we're going to see 42 handle 44. I don't know how fast this will happen. That'll be it. But yeah, so I see some chatter going on the indicators. The best to do is to get TradingView, you have to have TradingView to use the indicators, and the Pro version will allow you to, I think, put up 10 or 12 indicators at once. That's the best, probably. So the trade signals can't be released in TradingView because TradingView doesn't have the ability to do what we do on these models. So even TradeStation doesn't have the abilities. We had to write modules that gets called outside of TradeStation that lie on my desktop so that it can calculate some of the calculations. Unfortunately, TradingView is fairly lightweight when it comes to strategies and stuff like that. You can do some pretty cool stuff, but there's limitations, and there's quite a few calculations that we're doing. So unfortunately, yeah, okay, there you go. That's what I thought. I knew it was 10 or 12. Thanks, Mr. E. Appreciate that. Here we are, 34. What did I just say this was? We're almost there. 39, high 35 now. So, yeah, the market's ballistic. No, Fred, you do not have to have PortfolioXpert. I would tell you, we've been kind of bottlenecked with my illness, but we're about to do something pretty spectacular. We're putting a complete package together. You get every tool I use, and I'm going to be working and doing a lot of online training with them. And it's super discounted, so you can get everything. So I'm anxious to get it done. It's really been on my back. So I think that when you folks see this, for me, it's a must-have because it's going to give everything that you need. So we traded 35, backed off a little bit. Let's take a look at let's go back to, I just want to see what those numbers are. I mean, look at this 5 minute. It projecting really another, we're coming into the final hour of trading. So we've got at least another 10 minutes positive, maybe a little more. Let's go over it. We haven't looked at this for a while, but let's go over to the hourly chart. Bear with me. Let's go over hourly. Let me get ES up here. Yeah. Yeah, we should have been looking at hourly was projecting higher. Now what it's saying is we're probably going to stay positive going into the close. Well, look at what time is it? Yeah, we're in the final hour, so it looks like we're going to stay, we'll probably stay above, looking at the market grid here on the hourly. S1's 4109. Look at R2 is 3496, exactly printed R2 so far. Are we printing new highs here? Yeah, we're 41. This thing's just ballistic. Just 42 now. So we've now taken out, next stop is RXT at 54. And all those guys drawing trend lines on those index charts, man, you guys are in trouble if that's one of you. Trend lines are not I won't go there. As I always say, trend lines were meant to be broken. Yeah, so the live room is 3 days a week. I see some questions. 3 days a week. It's $297. When I put this new package out, we're actually working on some changes to our offering. So, and we should have all this stuff out by hopefully by the end of the week. Yeah, 54 is in the cards for sure. We're looking now at 42, 45. Just a vertical move here. Those of you that were in the live room know on Monday, I told you anything under 40.30 was a screaming buy. Almost could have got that again today. I love it. Somebody said I haven't used a trend line in over a year now. Congratulations. You've actually made it out of kindergarten. Yeah, so we're just, let's go back and let's hit on the 5 minute. Looks like 5 minutes got about 20 after. We're going to start to see a peak and start to come back in a little bit. But watch the market grid on this stuff. Those of you who got the indicators, you get market grid up, go on. There's a bunch of variables and things you can play with on some of these indicators too that make it crazy powerful, because you can fine tune this. And the beauty is this stuff works, what I'm doing right now, on any chart you can bring up. So we kind of had some fun. How about this for fun? Why don't we let the market do what it's doing? And if maybe I'll open up, why don't you bring up some questions that you might want to have me talk about. And those of you that are watching from the live room, if you want to ask anything, just let me know. Yeah, Stuart, you can get it on your laptop. Absolutely. Yeah, you'll have to have TradingView, which is a web-based product. And then once you buy them, we enable so you can see those. It's, like I said, one-time purchase. Wasn't interested in putting out a subscription type thing. Yeah, so, I won't troll. I was talking about this the other day. I realized why my channel doesn't have 100,000 or more subscribers, because I speak a completely different language. I don't talk about wedges and head and shoulders and trend lines and all this stuff. I mean, this is Edwards McGee, like out of 1930s. I mean, it's 2023, folks. And, there's just so much more out there. Yeah, the problem, Eric's mentioning how inaccurate they are. The reason why trend lines are so bad is because you and I draw them. So they're subjective. And there's something else. I'll just go on a minute rant on trend lines and this analysis, is when you draw a trend line on the chart, you start to believe that it's real. And so therefore you limit what you think the market can do, because that trend line is something that you want to respect. And when you do that, you end up limiting where you think the markets can go. And this is why everything that I've done evolved in a primary phase back in 1984 and 86 when we were using moving averages. And the only thing that I've focused on, which is really good, you can see the charts that I've had up there today, is that for the most part, very seldom, it's about 12% of the time, we went through quite a few charts, about 12% of the time, the markets will exceed the market grid values. And the market grid values are coming from a look back period on volatility or daily, or the bar range. So it looks at the bar ranges looking back. You can go from I think you can go all the way 200 days back. It'll normalize at some stage, but you can change that variable. We made it so you could change the variable. But I have a set on a 3-day look back. You develop a volatility range, and then there's an application on the forward-looking bar for a Fibonacci sequence and where the bars normally go. So the RXT and STX are the part that is telling you where the extremities are based on normal volatility. That's basically what it's doing. Yeah. Good luck with that, Carlo. Yeah. So we're getting some pretty decent pullback. So we got all excited talking about RTX, and now we're pulling back pretty decent. Yeah, I haven't used a trend line for, gosh, I don't know, almost 40 years. Yeah, just useless. Yeah, listen, the whole point of me putting the indicators out there, my whole point of making a one-time purchase is I want you to combine them with things you already know and trust, and then bring in some confidence in your trading. This is something I talk about all the time in the trading room, folks, is you have to build confidence. So when you pull the trigger, you have to know you're pulling the trigger on something. By the way, we're getting a veil top here on the 1 minute. Let me get over here. Yeah, we're starting to get a bit of a veil. You can see the algo is actually turned down. We kind of took our eye off the ball for a little bit, but this is the point of taking the things that I've perfected over the years, and then combining them with things you know and you trust. It could be a trend line. It's okay. I just don't use them. They're too subjective. They limit your thoughts on a lot of things, and even breaking when I say trend lines are made to be broken, how many times do they break and then you reverse? That's because they were supposed to be broken and they weren't actually a trend change. So yeah, you're probably better off selling every breakout on a trend line than buying it. There are times when it goes up, but this is why I combine everything that I have, and this is why I had this thought, is that why wouldn't I make it possible so everybody could have every tool and combine the thoughts like I do, if you like what I do, and make that possible and make it as affordable as we can. Because we have server cost, we have institutional clients, we've got lots of other business costs and things we do. But like I said earlier on, I think that I've been super impressed by the retail community that we've built over the last couple of years since the pandemic. So, hopefully you're new here and you want to join us, so that's something you can do. Yeah, so look what happened with the algos. We get to 1 minute, all of a sudden they stabilize, everything started turning back up, right into the moving averages, also into the fib targets. Let's bring that up just a little bit here. Fib target range as we go back just 2 bars ago, 27, 75, 21, 45, 17. The low was 22. So we came right to fib target 2 and bounced off of that. I think we've got a pretty good slope. Let's take a look at the 5 minute here. So here's what's coming into play. So we're looking at one more 5 minute increment, then the possibility we're going to see the 10 period moving average come into this pattern, and we're going to find out if we're going to get a big rollover coming into the close or not. What do we got here? 20 after. Yeah, RJ, I'll be glad when you get rid of the Bollinger Bands and the MACD. Yeah, there you go. Paul finished talking. But hey, if it's working, you're making money. Do what you need to do. That's my point. Yeah, my productions, I can't read the whole thing. Something with Musk. I appreciate that, actually. That's awesome to know. Okay, so here we go. 5-minute bar just up, finished. This the algos are saying this is the rollover potential rollover bar here. We might actually form a veil here. Let's put the webs on here as well. Let's put the we'll put the webs on the 5-minute. See if we can get a rollover from on
Order filled
on that level here. So we still have good support right now at, let me put the numbers are over here on the side. The 10-period moving average 23 is support. We're trading 30. Let me show you what's going on the 1 minute here. This is the hour, 1 minute's here. So we're starting to we've got some moderate downside projections coming in here, 27, 21, 17. Those are still valid from before. PPM 2, it looks like it's trying to get a little weaker, which means we could roll over here a bit. Don't see a lot on the downside just yet. On a 5-minute basis, we need to take out 2175. We take that out, we're going to see probably a pretty big rollover. Here we go, 20. Let's go over to the 5 because I think that's where the action is going to be here. We're going to watch this 10-period moving average right now because that's going to be your key support. If this market's going to fail, it's going to be right here. By fail, I mean come back and probably go back to R1 would be a big move all the way back to 4104. The question is, can we close over 4100 today? That's really the big question. Somebody was asking me about my succession planning. After this last month, that's become more real for sure. Pretty good selling coming in right here. Yes, you do, Jay Reardon. Exactly what you're seeing. Yes. Yes and yes. Yeah, there's a suite of videos also to understand and how to use them. There's another round of that stuff coming out as well. Okay, so this is where the money's going to be made, folks. Right here is we've got the PPM1 algos telling us we're going to turn south. Everything looks like we want to come down. There's still a pivot out there. You see this green dots right here. That pivot is at, let me find that value, is 4103, which happens to be R1, which is 04. 0304. So we're still kind of bouncing around here. This 10 is still a positive 0.88. So I'm going to teach you a little something on these BPMs. The 0.89 suggests there's only about a 10% probability to trade below the value of that 10 period moving average, which right now is 41.27. So we're starting to see it come down a little bit. We're still highly, there's a lot of support right here. So it's going to take, what time is it? It's 25 after. We may not be able to get through this level here. So we're still holding above the 10. This is 5 minutes, so we've got right now 3 minutes and 34 seconds before the next update. Still hanging on that 10, folks. Still hanging on that 10, folks. 27, last trade 30, 70, I'd say 34. Got downward fib targets, 4106. We got a pivot at 4103. We got R1 at 4104. You folks been around me, you know I love clustered numbers. So 4104 is big, big number. We probably don't get under that.
Order filled.
And we got a minute 59 on this 5 minute bar. Let's take a look at the 1 minute real quick. Like 1 minute kind of just firmed up. We're just locked into a range right now. This doesn't look like we're going to get much out of here. Back to the 5. There we go, another run. We're holding this 10. Let's see what kind of update we get here. 54 seconds on the 5 minute chart update. Be interesting to see if the algos moderate this projection downside. The PPM2 is actually staying above its first and second derivative, and that's positive. So I think we're probably seeing a consolidation. There we go, 41. So that 10 is held. We just got our update. Still kind of, even if you look, one of the things you do with these indicators, if you look at where it's solid line, that's the last actual value of the PPM. If you look at the faded dotted line here, even if you come over here where it's projecting to go to, it's still a positive value of 0.69. So you put your cursor on there, shows you at 5 minutes to the close, it's still PPM1 is being projected to be at 0.73 positive. So here we go. It looks like we're going to try to print new highs. So it looks like maybe a little squeeze. There's actually a little dragon head forming here on the 5 minute. So no downside here at the moment. It's going to be interesting to see what type of MOC imbalances that we're getting. Seeing last report, MOC imbalance 56 million to the buy side, which is a joke. Pretty amazing day here, folks. Before we leave this session, we'll stay with the live markets here for a little bit. But as we stay with the live markets here, I want to look at, and I'll be live tonight, so you folks can tune in tonight. And one of the things I want to look at to see how the daily algos are set up, and see if we're getting. It was projecting a potential rollover for tomorrow. So think about what we've seen. Actually, yesterday we were up better part, working on a 2% move. We're up 120 again today after being down 1. So we've had a 2.2 range today, percent-wise. Pretty big move. And BankMap, thank you for all the interaction today. I really appreciate it. So trading at 40, 39.40. Yeah, just make sure we should catch that. It's probably someone who just said they signed up for the live room. That's fine. Yeah, I'll make sure. Just make sure that we have your trading view handle. So if you didn't put that in somehow, I think we asked for that. There's new highs. Just send an email to info@Kendall Report with your handle, and give us the email address that you paid with. That's all you need to do. That's a good idea, RJ. Yeah, so we're printing 45, new high here. Market grid's turned up, the webs are all up, everything for the most part is positive. The PPM1, we're looking at the 5 minute here. Let's take a quick glance at the 1 here. Yeah, 1 is just stable as we're coming in. We've got 25 minutes to go, folks. There's 45 printing, new highs, 46.50. So I think 54 was the level, and I know that there's a potential for a massive short covering if we take out 54, because that was the old high. If we go back, in fact, let's do that. Let's go to the daily. Well, the high on the future is 41.80 back on December. That's probably the magic number to watch for. Here's 48.25, another new high. Let's put this 5 minute on. So yeah, 50.50, working towards a 54. We're just gone vertical now. 52 prints. Order book just thinned out, folks. There's no liquidity. Looking at level 2, there's only 30, 40 contracts on the side. Here's 53 printing. I don't use stops in day trading. Just like trend lines, stops were mean to be taken. So we could say we printed RXT. It doesn't look like we're done, folks. There's 54. There's RXT on the for the daily market grid. 55. We're taking it out. Tell you, there's some potential big short covering coming in here, folks. Order book is completely wiped out. Let me I just want you to see the order book over here on the far right. See if I'm trying to get it so you can see it better. We've traded 56.25, but we had hundreds of contracts. Now it's just thinned out and it's very, very choppy. And we're just seeing, this was a dragon head I was talking about. Look at this vertical move here on the upside. So 57 prints, 57.50. $59, $50, $60. I know there's about a 20-second delay here, folks, so. So we printed 60, 54 is the RXT. Pretty amazing rally, folks. Up 170 on the day. New highs, 60.50. Yeah, the one thing about the live room, folks, there's no lag on the screens. It's real time. It's a private room on a server. It's not positioned on the internet with YouTube in the middle. Yeah, I think this is the beginning of potentially something larger. I said something that we would do here. Let's see here. Let's go to daily real quick. So daily fib targets 41.67 is still in there. Actually, it says one more day. The algos don't start to turn until after tomorrow. So let me see if I can change the scale so you can see this just a bit better. You see we're coming very close to this fib target 1. And yeah, so we printed up, looks like maybe we're trying to peak this thing out here. 61 was the high of the day. We're back to RXT here at 55, 54. Yeah, so this is a pretty significant chart here. Even on the pullback, it's not even a pullback to being, it's just saying that the upward momentum's going to fade a little bit. But I want to show you something, and this is the point of the angle of attack. Let me just see something, if I can pull something up, since we're all hanging out here. Well, 500 of us hanging out. Let me show you something here. All right, I'll show you, I'll put this on the screen here, but I'm trying to get it to a size that, so this is the angle of attack probability map. And so what we're looking at right now, this is the daily, and right now, if I can get this positioned, you can see our daily PPM is on PPM1 is a plus 0.53. If we look over here right now, plus 0.53 on roughly there's only a 30% probability that you would drop below the 10-period moving average. Now the 10-period moving average was 44, and I want you to see that the low of today was 48. So anything, the other day when I said 30, we actually traded through it just slightly. The other day the low was 407 and the 10-period moving average 23. So we traded through it, and if I put up here so we could see the market grid the other day, we actually traded down to S2 roughly, because it was an 07 low and 06 was S2, and then we did an R2 on the upside. So today what we did was we did an S2 again, 57. We went just below, actually went to S3, did we? Hang on one second here. 48, S3 was 41. So we went almost to S3, and then we went to RXT, which right now is 41.54. And so we've been above that. So I show you this. These are different probabilities. This orange line is a parabolic curve. These are the values of angle of attack. The TV is a typical value, and it hits a terminal value. What we're in right now is just about to go into this extended peak value trend mode here. And hopefully this isn't too small on the screen here, but this is what typically will get an estimated 1.4 value. We're at 0.53. We're right at the phase where there's a juncture here where you go between parabolic and an extended rally. So these are the probabilities that would happen. They're inverse. If it's a negative, you have to flip all the values to negative values, and the same characteristics are the case there. So as we look at these whole patterns here, let me just bring this back in. So this is the 5 minute. So maybe we're trying to peak out here. Where we at last? 53. The PPM1 is starting to fade a little bit. PPM2 is coming up. So, I mean, the support here on this is 41.38-ish, 41.40. And so we almost have to go back to R3 is your support now. About 15 to go.
Starting to get a little roll here on the 5 minute. There's a potential for. Let's go to the 1. Just 1. That's daily. 1 here. Yeah, so we have support here now. Support's at 48. PPM2 is at a plus 0.22, so it's fading a little bit. Potential for us to go down, maybe print down as low as 41, which would be the 40 period moving average. Just a 1 minute chart, so very, very short term view of everything. Yeah, so thanks FFE4. I know you've been around a long time, and I'm trying to get together a couple friends. I did a spaces with Dr. Jim Baker and myself. I'm trying to get another guy, a buddy of mine out of London, Dr. Namur, to come on, and I want to have a conversation and bring in Dr. Given, Dr. Baker, and Dr. Namur, and we want to have a big conversation. So maybe we'll get that done. Yeah, so we're getting the selling coming in here, folks. We just broke through these numbers, maybe coming down into this pattern. Let's go to the 5. 5, we got support now at 41, 40, 41. That's what the 1 minute chart was telling us there. In a lot of days, somebody mentioned we get a big move like this on the Fed day, and then they fade them the next. That's the algos are suggesting we got another day, maybe a fade on Friday. And I'm looking to Friday to our algorithms for our intermediate models. And I'm thinking we got a pretty good shot at seeing more traction come into our database, which would be interesting. So here we are trading 44. We're right coming into this 5 minute 10 period moving average. Is still up at 0.64. 40-40 angle of attack says we should be able to support right at these levels right in here. Although it does suggest that the algos are saying that we're going to weaken a little bit more, so we're going to get through this 10 and then probably head towards the 21, which is right now at all the way at 14, but that'll come up here in the next few minutes. See what these values are. 1 sec. About 3 handles, 4 handles per 5 minute period. So probably 20, 24, probably coming into that R2 number. So I'd like us not to get an RTX sell signal. So if we trade under 54, as long as we stay under 41.54, that's a good thing for tomorrow. If we trade above that, we probably do get some retracement. Traded right through the 10. Here's 35, slashing through everything. This is actually healthy, folks, to see this kind of backfilling here at the end of the session.
Yeah, the PMIs are going to continue to contract. That's expected, I think. So pretty good selling here, 32 prints. This is R3.
Order filled. Order filled.
So we're trading 31, 32. I thought my mic was turned off. Sorry.
Order filled.
Yeah, 100 handles in an hour. That's pretty amazing, huh? Yeah, 853 million on the sell side now. We'll see. Normally those numbers you can fade, I've noticed. So back at 30.
Order filled.
So we just traded R3 on the 5-minute. I suspect we'll probably get back into high 30s, low 40s here. We come into the close. We got, what, 7 minutes to go. Yeah, it's funny. I've heard this term around this dumb money versus smart money. And my argument is all money is money, not dumb or smart, meaning that if you're looking at flows in and out of the market, you need both sides of the market. It's not dumb or smart. It's called the market. Yeah, let's take a look at the one, see what's going on here. One minute's trying to turn up a little bit. Oh, this is interesting. This was something I was going to show you folks earlier. And we're looking at, you'll see this number 5 here. This tracks how many STX buy signals, and this is on a one minute chart. I don't know how accurate it is on a daily. It works really good. I'll show you that in a minute. But the so we're getting patterns here saying that we're probably bottoming. There was a pivot up here at this 40. Trying to get this right number here. 41, 45, 40. 42 level was where we pivoted down. We should probably try to run back toward that, I suspect. We come into, what do we got here? 5 minutes to go, folks. Yeah, I'd have to agree with the comment on Ron. So catching a little bit of a bid here. The 5-minute looks like we could trade back to R2, R3, which would be 36, 38 on the 5-minute. Pretty impressive day, though, I would have to say. '28's printing, so a little selling coming in. Not done yet. So the 10 period on the 1 is resistance here. Notice PPM 1 is minus 0.39. So it looks like that's going to be some pretty good resistance. 32 is going to be a resistance point. Break above that, then you're probably heading back to 38, 42 range, something like that. But we've witnessed all you're seeing now is squaring up of positions. Imbalances are claiming to be on the sell side. It's probably a little profit taking, maybe. Who knows? Yeah, William Mick, thank you. Appreciate it. Yeah, everybody. Listen, that's my goal, is to try to give you folks tools, teach you how to use them, combine them with what you do. We just got some upside projections here on the fib on the 1 minute. I want you to see this. These are real-time calcs going on. So we got 41, 63, 77, 86, kind of unrealistic off this one. But the algos are trying to turn a little positive here. Come into the last 2 minutes of trade. Yeah, hit the like button, folks. Hopefully we got lots of likes. Before you leave, if you hung around for a while, you like what I'm doing here, do this. We haven't done these. It's kind of fun. We need to do a live Wednesday live like this when we don't have the distraction of the Fed and all that stuff, so we can do some things like we used to do back in 2020, 2021, and that's do a session where we're just focused in. We can do individual stocks, a whole bunch of other stuff. That's cool, Dan. I think I saw you signed up, correct? So welcome. Thank you. There is the bell. So this is an interesting point in time to watch things, folks, to see what kind of squaring up of orders. So this is everybody that's out there, ETFs, everybody. I've told you before, I used to work in a delta neutral fund, a hedge fund, back in the day before there was basically 24-hour trading. And yeah, thanks, Raphael. Appreciate that. But this is where everybody squares up right here. So we're trading all the way down to, looks like 28 or so. Yeah, what's up, folks? Before you leave, hit the like button. Come on. It's been 3 hours. At least I can get a like. They're free. $349. Come on. Yeah, so a little extra selling coming in, so some little liquidation coming in, people taking advantage of these little higher prices. So trading down to 2027 here. Notice that little, I want to show you something before we leave, folks. Let's put this over on daily. And I've got the, so I got to go back a ways, but I want you to see this way over here on Thursday, September 29th. We got the STX, you'll see a number 5 here. I wish I could zoom in on this stuff, but I can't. The number 5, and that was where we had 5 STX buys. On the S&P, this is a highly accurate signal that comes out. So on the 29th of September, we had one more little spike low in October, but it was a reversal day. It made a new low and reversed. But this was where we got this last signal on the STX to be long. And sometimes that thing picks the exact day of the low, and we get an STX buy signal. And the way this thing works, I have not released this to the public. We're trying to figure out how the best way to do a couple things. We're working on a project called Wavetech Signals. Won't be exactly the models, but it will be some signals that you can use in conjunction with the indicators that are on TradingView. So, but anyway, that little 5 buy, that was on September 29th. That was also in early October is when we started to see traction on our intermediate database. It went from way down at the depths here of September, was around 8%. We got finally over 22%. We started to get traction. We're now at 48%. And that, we're now above 50%. And that was the beginning in this area here where we started to see a lot of accumulation of things. So let me come back on board here for a second, just to talk about this for a minute. Is, having the database that I do, and I told you I feel like one of the luckiest guys in the world, because most of these folks out there, I built multiple trading platforms, and I've got a pretty expansive career. But this, the software, Wavetech and PortfolioXpert, and those platforms I built, and they are capable of generating some amazing returns. But it's different, and I'm going to start a Wavetech / PortfolioXpert channel, which will be about training. And it'll just be like one day a week that I'll do that for like an hour. It's not going to be 3 hours. It's going to be, we're trying to put some things together, because I really think it's going to help a lot of folks. But when you can look at 16,000 symbols, not only look at them and make an analysis of them, but know that they're doing exactly everything that you told it to do. And not only that, you validated these trading models going back 30 years ago, and they've driven your entire career. That's why I talk about like I do, and I talk about the confidence that I have in the approach. I know we look and we play with a lot of indexes and do all that stuff for trading, but the reality is there's much more to these markets than a couple indexes or trading a few futures contracts. And when you start to get into portfolio management, I plan on launching something. I really want to help folks that are managing their 401ks or show you how you can manage your 401ks. Working with somebody that's going to show you how to take your corporate 401k and make it as self-directed so you can get away from your companies. Most plans you can. So we're working on a number of aspects that people can get actual control of their finances. And this is me giving back. I've been running this for investment advisors since 1998. We launched our first advisor onto this platform. So we've been working with the institutional folks for a lot of years. What is that? 25 years. It's hard to believe it's been that long. But that is definitely, I want this out for everyone to use, and I'm working on a number of projects to make it even easier to use, having pre-built strategies and things that you kind of plug and play. You don't even have to learn how to use the software. So there's plenty of really good things coming out. So I appreciate everything. Yeah, don't put your 401k. The answer is yes, Jaron. If anybody and everybody, and there's a lot of them that have bought the indicators, when we put out some of these this all-inclusive, we call it the complete package, you will get a discount for anything that you will get credit for everything you've already spent toward that. So yes, and that's to everybody out there, and there's a bunch of you. Okay, so absolutely. So, and I think the other thing I'm going to do is I'm going to probably stop monetizing my channel like I have over the last couple of years. I'll just come back on screen here. Yeah, I'm probably going to put another way if you want to support the channel. What I'd really rather do is I'm trying to put an app together that would deliver some of the information to you guys, and it's like a few bucks a month, really, not a lot of money, and then there's a different level. So that's what I'm kind of working on. But maybe putting a Patreon. I just want to get the ads off the channel. YouTube doesn't. In 2020, YouTube paid really, really good. And now, YouTube isn't really doing much at the moment, or it doesn't appear that way. So, yeah, Eugene, I can probably do that before I leave. So let's do this. If you're a member on, I'm going to go to let me get off screen here. I'm going to go to PortfolioXpert website. I'll go to my account. I'll show you exactly what you can see here. So this is you can see this is 21. You can see this is 22. We got down. This is equities only. It's not the full database, so I can give you this view. You get down to 32%. Let's bring up one more thing here. Let's bring up this here. This will give you a better indication as well. So this is, make it a little bigger so you can see it. You can see 21, we started selling right at the peak, but so since you asked this question, I'm going to go into just a touch more detail, and then we'll finish on that note. Bear with me 1 minute, I'll bring something else up. All right, so go into here. This is the daily database. This is a better place to look.
this gives you all of the symbols in there. So we got down to about 18% down here in last year, September, and you can see the traction we've been getting in the database. This is the S&P 500 up at the top here. So let me just draw on a couple of things and I'll just show you folks. Yeah, so this area, let me get the right drawing tool. So when we were down here, this was the bottoming phase of the market here. I'll just draw straight up. Once we hit the peak low, then we started to see some buying coming in, another trough here, but it was a higher trough, and then we started getting all this traction that we're seeing here now, and getting up into this 50% level, and this is where that goes. So let me just take all this off and then show you the probability map here. I'll show you this is where we get this is actually that chart where we're showing you the decline. So this is, you can see 22, we're basically from 21, mid 21 we started see the database liquidate, and this was prior to the high. And the same thing happens as the market is starting to bottom, we start to get traction because we're looking at literally 16,000 symbols. So you start to, what looks like, this is, I'm trying to get this. So the first cycle right here at 72, this is when the first cycle profits are taken. And then these are new trades that carry us into the next level. On the reverse side, when it's bottoming, we get the database starts to improve. I know it's kind of hard to see through this shading here. Should have made it a little lighter, but that now we're up literally up into 50% level. This graphic was made a little while back, but the point is that this is the bottoming pattern. So I'll go back to here. This was where this chart was made, right over here. So since then, we've gotten more traction, and you can see where the S&P is starting a bottoming phase, and this will start to carry us into probably the 4,500 level, and that will be that's why I continue to suggest that the markets are going to do better here. And I know a lot of folks want to equate that the market and the economy are the same thing, and they aren't. So you're likely to see PMIs, you're likely to see employment, all these things increase, and that'll put some noise and maybe some more consolidation. But the general trends in the markets will be dominated by these, by the models and what's going on here. So you'll see that start to happen here. So like if we go over, if we go over to the, we built an index that's a BPM universe here. And if we go over and put this on here, you'll see that as the market starts to bottom here, you're going to see a continuation. This is an average, basically a price weighted chart, not a cap weighted. So this is basically average values of all stocks in the database. And so we're starting to see that go up. This was the spike on the bottom side here, was the 2020 lows, and then we saw a continuation. And this was the 21, and we saw all the average values starting to decline. Now we're seeing a retracement, and that's something I've been talking about for a while,
is we're not necessarily going to get a all-time new high out of this, but the general rotation of these stocks are likely to continue to go up. So that's why I mentioned in last night's YouTube video is that you need to broaden your view away from just thinking that what the S&P does is what the market's doing. There's the breadth of the market has improved substantially, and like I said, it's not just looking like people go, oh, this is percent bullish, not the number of stocks over a 200-day moving average or some moving average. That's not what we're doing here. What we're doing is looking at charts that have been identified as even beginning or in trends that have probabilities of going on. And I mentioned something a little bit ago is that when you're using this Wavetech process, what we're doing is we're recognizing trades that are starting to evolve and move in a directional trend, and we have a map on everything. So this is let me just bring up something here. So yeah, so we're neutral on Apple right now. It's just basically saying it's in a consolidation phase. This is our logic. There's some logic that I built in here to recognize this. It suggests a trend will emerge from this market cycle. So this is recognizing that we're in consolidation bottoming phase, and we're likely to see something positive come out on this from the standpoint. This is the intermediate models that we're looking at, and actually I already. On a short-term basis, we've actually been long Apple from 133. But what I want to show you, I'm going to go back one step here, and there on every symbol in our database, this exists. It gives you average win-loss. It tells you how long it holds. So that on an intermediate level, the average holding is 279 days on Apple. Standard deviation is 159. We've actually held Apple for 695 trading days. That's like 3 years. This is an intermediate, and you guys know what's happened with Apple. There were years that you just wanted to own this thing, and it recognized that trend. The minimum it's ever owned is 59 days, but there is a map on every symbol in our database. This exists. So, and then we have a rating on how good the models do. So there's a lot of in-depth. Like I said, we're running, if we go over back to research page here, we're running 15,872 symbols in this database. And right now, intermediates are 50.42 on that. So anyway, ran over a little bit. We still get quite a few folks hanging out. Just wanted you to understand that. Yeah, I'm just looking at some comments here. Yeah, I'm just final look at some comments here. Hang with me, folks. Yeah. Okay. Yeah, I think it's time. So 3 hours and a half almost. So I appreciate everyone who's come up on screen here. I appreciate everyone. Yeah, listen, there is a lot to learn. I just happened to notice. Look at the chart on the bottom on the right. I guess it's right. It's inverted, so I'm not sure what side of the screen it is on. But on the bottom there, that's the treasuries, and treasuries down to 340. I was talking about this 335 as being a pretty good support, so they just collapsed after all this. So pretty interesting day, folks. We're printing 44, 45 on the S&P, so we rebounded from the 28 number. right? So that happened while I was going through all of that stuff. And yeah, it's interesting because I did do some buying down there. And so we rebounded pretty substantially back to 45 after that little sell coming into close. I am in Arizona. So I am not in the valley. I'm in the mountains up in Arizona. So central north Arizona. Anyway, folks, appreciate everybody hanging out. We still got 300 hanging around. Hit the like button before you leave. Make me feel good. We've only got 434 likes. Yeah, still working on my little illness. This last month really set me back. It was not how I had planned on starting the year. So I was hoping to put a conference together. Somebody said party in Arizona. Matter of fact, if you want to comment, if you'd be interested in coming out to a conference and learning a whole lot about maybe everything from managing your own. See, my big deal, folks, is it's fun trading and all that stuff, but the real stuff is understanding how to manage the money. And my real goal is not just to help everybody. And I think that those of you that are millennials are going to have to, you're going to have to learn a lot of this stuff. I suspect that a lot of you don't want some advisor, somebody you go in their office and they tell you what to do. I think a lot of what I'm seeing from the retail is a lot of you want to have hands on deck, and that's what I'm going to show you how to do. So I did not take the clot shot, Reese. I did not. That's not even a possibility, but I appreciate it. All right, folks, this is going to be it. I'll go ahead and close out this session, and we'll see you tonight, same time, around 9 o'clock Eastern time. See you then.